Kangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB this Monday afternoon. I'm Juliette Sarli. Great to have your company on what has been yet another roller coaster start to a trading week. Really, this threat coming through from President Trump that he will obliterate what we are seeing with energy facilities in Iran if they don't clear the Strait of Hormuz has really rattled investor sentiment. Let's have a look at where the local market is finishing the day's trade. And encouragingly, we have actually paired some of the earlier steeper losses. We dropped around 1.7% on the open. We saw the likes of Japan's Nikkei index open down more than 4%, South Korea's KOSPI fall by around 5%, but there has been a little bit more support coming through in the afternoon trade, which has managed to trim our loss on the ASX 200 and CBO 200 to around 0.9% there on the CBO 200, and I think around 0.7% on the ASX 200, which is currently at 83.70 points, heading into match off, still a 100-day low, and in fact we've touched sort of multi-month lows on markets today, while we've also seen a gauge of global stocks, so the MSCI global equity fall to its lowest point since November. Iran here warning it would strike energy and water infrastructure across the Gulf if US President Trump does follow through with his threat to attack its electricity grid. So that brings us to the three themes of the day, and it really is dire strait as we wait to see how much longer this key, of course, passageway is going to continue to roil global oil supply and therefore push up global inflation as well. A lot of elements down and under. We've seen huge selling coming through in local markets. What is not down though is iron ore futures encouragingly rising. They've been supported by high freight rates, while other steelmaking ingredients such as coking coal and copper also gaining, countries booking coal cargoes for their energy use due to a spike in these global oil and gas prices. And then, of course, amidst all these global inflationary pressures, we are repricing rate expectations. And in fact, there is now speculation that you could actually see further rate hikes coming through from the RBA, taking the official cash rate to 5% by Christmas. This is really on the back of the global inflationary pressures that we are seeing. And government bond yields, a key signal for future rate moves, jumping sharply. So the 3-year yield now at a 15-year high, the 10-year climbing to levels not seen since 2011. Let's get into the sectoral moves amidst what we have seen in the market equity action today, kicking it off with some of the gold players. They have fallen, with gold coming under significant pressure. This is as the US dollar, of course, rises, elevated interest rates, the expectation the Fed may actually now hike rather than cut. Northern Star down 6.5%. Looking more broadly at what we've seen in the materials sector, when we look at the mining stocks today, BHP down 1.2%, Rio Tinto down by 1.5%. But of course, energy has been the bright spot, with crude oil continuing to jump, and Karoon Energy appointing a new CFO, sending its shares to a 9-month high, up by almost 6%. Some other companies on our radar, Medibank, this has been a broker upgrade, sending its shares up by 1.5%. The banks, though, downgraded by Macquarie. NAB was down 1.6% today. ARN Media hitting a record low, with legal proceedings beginning against the company, brought on by former anchor, star really, Kyle Sandilands, and Hum Group dropping as the company said its independent board committee is progressing discussions on a potential takeover from Credit Corp. While SGH, pretty flat there, the conglomerate has appointed Matt McKenzie as the chief executive of its Boral Building Products division. Let's make sense of all the mayhem with David Scott from StoneX, who joins me now. Scotty, great to see you. And, I mentioned that not just our equity market being hit, some big wild swings coming through across Asia today too.
G'day, Juliet. Great to be back. Yes, another wild day in Asia. Never miss an opportunity to panic at the start of the trading week. You're right. It's really hard to go and ascertain exactly where this goes and plays out, because we have so many different moving parts. But Donald Trump's threat, as you mentioned off the top there, to go and obliterate the energy grid there, energy sites there in Iran, all things being equal, if he follows through with that, we should know around about the open tomorrow in Asia. So very, very important 24 hours ahead.
Absolutely. And I guess the major thing we're watching is crude. You've given us a chart here, and you're saying not so much a signaling, talking about the ASX 200, not so much a bottoming signal in futures here, but what are we seeing in terms of some of the risks in markets that are starting to show up?
Yeah, it's interesting what's happening when it comes across some of these markets. So the one thing that I have noticed over the past few days or so is that it's the markets that ran really hard, like big momentum plays, sucked in a lot of retail investors that have really been the ones that continue to go and get hit hard on any new headline that comes through with a negative backdrop to it. The local market, you can see, as you mentioned, we hit 10-month lows today in futures trade, but you can see there's this big, long downside wick beneath 8,400, which if you go back over time, has been a pretty important technical level. So the fact we've managed to go and close above it, it's not a genuine bottoming signal, but it just tells me that the market didn't run very hard going into this crisis. Yes, it had a strong trend, but it wasn't one of those really big momentum plays. And we might have seen a bit of a clear out of positioning. All those really weak hands were taken away at the start of the session, and we've had a nice bounce into the close. So when it comes to the local market now, I think we've gone a long way to pricing in. Not a worst case scenario by any stretch of the imagination, but at least a prolonged energy shock that could go and last for months, if not years.
And that's being played out in so many, facets. We touched earlier on what we're seeing across Asia. We've talked about our market too. What about some of the things that were really loved towards the end of 2025? Gold, silver. What are we seeing in FX markets?
Yes, all of the names that really ran hard are the ones that are getting absolutely beaten up, including today. We saw some headlines that came out about Israel launching fresh attacks on Tehran. There was one headline in particular that talked about a residential block had been pancaked in a town in Iran, which again is horrible to go and hear, but it does come from the Iranian news agency, so you've got to go and put that into the mix as well. But when that came out, it was just really instructive just to go and see. Risk had been trying to go and recover over the course of the session, but it was the KOSPI, it was the Japanese Nikkei, it was the Aussie dollar, it was gold and silver that the ones were absolutely obliterated. Looking across some of those other markets that I follow pretty closely, like the FX space, there wasn't anywhere near that kind of reaction in other major pairs. So it just tells me that it's not so much just about the geopolitical headlines that come through right now, but it's more so what we're seeing here and now is positioning, an unwind of those really unsustainable trends that we saw in the lead up to the war.
What does all this mean then for rates? I mentioned that money markets suggesting the cash rate could be at 5% by the end of the year. I mean, you sort of almost get to the fact that if that happens, there's going to then need to be an emergency cut kind of pivot. It's quite, it's moving a lot, very fast out there.
You've been doing this a long time, and you're exactly right. We've moved very quickly. I went and looked at the pricing for the May meeting for the RBA, and it's currently priced about 80% chance of another 25 basis point hike coming through. So 3 in a row. That would take us back to where the cash rate was before the last cycle ended. And we're expected to go and do a lot more beyond that. But at some point, we've got to be concerned about demand destruction and what that means to activity. If you look at all the political headlines at the moment, it's all about trying to go and secure diesel, secure fuel supplies, because we, relative to the rest of the developed world, had very, very low stockpiles heading into this event. So there is a clear vulnerability there. If we can't get our hands on fuel, then we're in real strife. And then that points to the equation where, yes, we'll have this big increase coming through in inflation, but at the same time, it really spells trouble for the labour market and unemployment. And the RBA, like not every central bank out there, has a dual mandate to go and target full employment as well. So that's one to go and consider as well. I don't think that the market can go and keep adding at the current rate we're doing without some serious strife taking place.
Yeah, absolutely. All right. Well, let's end on a positive note, because I know you watch iron ore futures quite closely, and I mean, at least they're moving up.
They are. Again, the threat of export bans being put in place, the scramble for energy anywhere in the world. And iron ore is an interesting one. You mentioned about some of the factors behind it. There has been a bigger restocking take place, but you also need to remember that a lot of these contracts are the cost of freight and rail, so getting it to the end destination. So when we're talking about crude prices, which have absolutely soared, LNG shortages and the like, it's not surprising to see there's a lot of strength coming into this particular space. Again, though, if we do run into the risk of demand destruction taking place, you do wonder how much steel is going to be produced in this kind of environment. I know that some people have been talking to things about war preparations and things like that, but I think that may be a bit of a stretch there to the bow.
All right, David, thanks so much. As always, David Scuddy from StoneX joining us from Adelaide. Getting back to equities, the stock of the day was St Barbara. And Andrew spoke to our experts, David Novat from Wealthwise Education, Kai Chen from MPC Markets.
Probably one of the small to mid-tier producers. It produces about 40,000 ounce per year, but the cost is fairly high at about $5,400. So, it's had some issues. However, it does have some positive news going for it. So basically, they're planning to expand on the Simberi gold project, which is expected to lift to about 200,000 ounces with a much cheaper ASEC. Now, I think in terms of safety, there's probably better mines out there.
And again, it comes back to what the gold price does. We see support at that level that I showed you. And if it just consolidates here and stays here, around 6,400 Aussie, that'll be very profitable for a lot of these producers. So it's a little bit of an overreaction, but I do like St Barbara. I just wouldn't be my preference right now on my top of my shopping list. There's many others.
You've worked hard for your money all your life. Now your money needs to work hard for you. Whether you're building, transferring or drawing down, the right information makes all the difference. At Ausbiz Retire, you'll find the latest news and insights from trusted experts all in one place. Ausbiz Retire is powered by RAN, retirement income done differently.
Well, as we mentioned, a down day on the markets, but let's try and find some bright spots and have a look at the leaders in today's session. Eagers Automotive was up 6%. I mentioned Karoon Energy, a 9-month high on a change at the C-suite. Yancoal also higher amidst these higher coal prices, and a bit of upside in some tech players too. Zip was up 4.3%. To the downside in today's market, a lot of weakness in gold players, in these metals players, Ora Banda, Greatland Gold, Bellevue Gold, among the biggest decliners. In the small end of town, we saw gains coming through from some of these players coming up on your screen when we look at the small end of town. Terracom there up 9.5%, Main Pharma up by almost 5%, and the laggards in the small end of town include Atlantic Lithium and Rand Mining. All right, having a look at what is happening tonight in global markets. US construction spending, EU consumer confidence expected to go down for March. No surprise given what we are all grappling with. And tomorrow locally, we get manufacturing and services PMIs, and Japan's CPI for February will also be released. Let's recap where the local market has finished the day's trade. Encouragingly off the lows from earlier, but still down by 0.9%. The ASX 200 dropping 0.7% or 63 points, 8,365. And of course, if you strip out the gains that we saw in energy utilities, it would have been a much worse session. But encouragingly, we did see a little bit of a rebound coming into the day's trade. And I just want to check where South Korea's KOSPI is. It's still down almost 6%. So quite a lot of weakness coming through in Asian and global markets, which has got the MSCI Asia index and a global index as well, holding around 4-month lows. We will do it all again from 9:45 a.m. Eastern. We'll see you then.